Aloha everyone, Joshua Hayes at BigWaveTrading.com. The S&P 500 kind of ran into resistance right at the 2800 level. You can see via here the SPY, we had a rejection right at that resistance line. Heavier volume, but overall it wasn't that bad. You can see the volume on the New York Stock Exchange was actually lower than the session before. The NASDAQ was higher. That's a pretty significant reversal. I'm more interested in that reversal than I am in anything else, along with the Philadelphia Semiconductor Index. That had a pretty harsh reversal. But overall, um, Russell 2000 reversing at that upper trend line. And now after another 18,000 straight up days, I would assume that we're going to start another 18 trillion straight down days on the market. So be ready for a pullback. More than likely, first line of support is obviously the old resistance line on the Russell 2000, then the 50-day moving average, but then the 200-day moving average in this support level comes into play. So there's plenty of room for the market to find support and rally higher. And another positive development, possibly indicative that the market pullback will just be something more short term, as we're in the bullish months of March and April. Bullish seasonality in our favor with price confirmation is that this evening, despite the negative price action, while I do have new hedges, I have new long positions. Now, I had some stops trigger intraday today, small profit stops, small sell stops, blah, blah, blah. Nothing really big, nothing really bad, but I'm maxed out capital-wise. Whatever I have left, if it's like $16,000, $8,000 will go into the hedges. $8,000 will go into the new long positions. The hedges take priority, but since the hedges haven't been working, obviously, this entire downtrend, or uptrend, excuse me, obviously, because the yield curve is still positive and we're not in a bear market, I don't want to go too heavy into the hedges. I'll just treat everything basically equal. So first off, the hedges that did trigger, clearly SQQQ. That one, bullish engulfing reversal candle off its 52-week lows on heavier volume with a BOP surge. That one's pretty clear cut. 1547 limit, 1445 stop. It's supposed to be 2% of my account capital, but like I said, that's not happening. SOXS, the other hedge on the semiconductor index, limit order 1031, the one and only stop 934. Now with SOXX and SQQQ, once again, like always, since this is coming off the 52-week low, if that low goes, the 1445 level on the SQQQ, the 934 on the SOXS, I'll just be selling off 50%, and I'll be doing that all the way until I just have one share remaining, and then I'll get out of the one share. The other hedge, EEV, this one was in both of my green BOP scans, 20 days green BOP, 5 days max green BOP, heavier volume of another bullish engulfing candle. This one I want to get long, limit order 742 the high of the day, first cut loss level right there, 713. But because it's not from the 52-week lows, I have a final cut loss here at 681. And I'll decide if I want to do the half thing, but my thesis on a play like this is if the first level goes and the second level goes, you're in a pretty strong uptrend, so you don't want to be hedged anymore. You'd rather put that capital to work in new long positions. And with that being the case, the long signals this evening, they're all extended. The only one not extended is the add signal, but SBOW is extended from its 20-day moving average. CTSO is extended from its 20-day moving average. And WTT is extended from its 10 and 20-day moving average. Now you can see with WTT, you got a price surge, volume surge, BOP surge. With CTSO, you got a BOP surge, volume surge, price surge with a pocket pivot point signal. And with SBOW, you got a minor BOP surge, minor volume surge, and a good price hammer reversal candle pattern with a pocket pivot point signal. So SBO and CTSO have the pocket pivot point signals. WTT is too extended, but it's a fresh move right above the 50-day moving average on very strong volume. It took it out the day before, but today was the very, very strong move. And as you can see, a previous uptrend full of accumulation, a pullback on low volume. So even though it's extended, I have no problem. Now getting back to the heaviest of the long positions, CTSO was in my perfect speculator scan. Sub 10 was also my new 52-week high scan and price volume BOP surge scan. So 1% for each of those scans, that's 3%. It's extended by 1, so it should be 1.5% of your account capital. But once again, I am in no way, shape, or form going to be able to do that. The $8,000 remaining in this half of the long positions will just be split up, and I'll have to do some math to figure out what percentages goes into each of the new long positions. But CTSO, if you have the capital, 1.5%. SBOW should be 1%. It's a canned slim scan. It's extended, so it's only 1%. Limit order 29.40. First cut loss level right there, 28.45. Second cut loss level 28.24. Final 26.72. And in my haste, I forgot to mention the stops and the limits on CTSO. CTSO 810. Your first cut loss level right there, 760. My final cut loss level, 745. I'm not giving this stock room to work all the way back to the February lows. But if you want to, you could have a stop here, stop here, a stop here, and a stop here. And I say that right now, but I might change my mind in the morning, especially if I can only get very little capital into this. Might as well give CTSO some room to work until it clearly and convincingly fails, similar to what CVGI did today. But thanks to my stops, once again, why I have stops, my CVGI orders triggered at the morning around 974, got filled at 952 on one of them, well ahead of where it closed at 890. That is why I always use stops and not wait to the end of the day for sell signals. So CTSO, SBOW, WTT, 232 will be the limit order. And with this one, since it's so extended, it'll probably pull back, so I want to give it room to work since I can't get a full position anyway. 221 first stop, 217 second stop, 207 third stop, 199 final stop. And once again, if you pay too much in commissions, if you don't have a large account capital, you either just use the 221 and 217 level, or you completely avoid WTT since it's extended. And then the add signal, RCKT. Let's open this up so you can see the open body and the candle. There it is. Okay. So RCKT, Rocket Pharmaceuticals, back-to-back pocket pivot point signal. Green bop, slightly heavier than the session before. And even though volume isn't heavier than the session before, it is above average. And back-to-back pocket pivot point signals, bullish hammer candle over doji candle with the open hollow body closing higher than where it opened. Want to get long RCKT, it is not extended, so 1% since it's an ad, it would be 2% new position over $10, perfect speculator name. 2%, it's an ad signal, that's halved, 1%, limit order 1867, first cut loss 1704, second cut loss 1635, somewhere in here, I'm not quite sure, you're cutting slicing hairs, and then final cut loss 1579. There's also new speculative position that I want to get long from the perfect speculator scan, but I'm going to wait till some stops or some cash is raised in the morning before I enter that order, and I have an ad signal in an IPO stock that triggered. So all of those long positions will get half of my remaining capital, and the other half will go into SQQQ, SOXS, and EEV, and those are obviously the three priority positions. With us, once again, V ramping right into major resistance with a major reversal. That's a bearish engulfing reversal candle there on the NASDAQ, everyone, on heavier volume. So it's not like it's a minor pullback from the highs. It could get ugly before we do find the next series of lows. And like I said, we love to move straight, we're not straight up, but we love to V ramp up and V ramp down. So I would assume we have another V ramp down. If we don't, we find support and rally higher. That's really good news as we head into the end of March and into April. All right, everyone. I'll see you in the chat room in the morning.